Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague here.
Yeah, I'm Yatin, Mota, and welcome to the show. Nandita, nothing great in the markets today.
Tepid Tuesday, Yatin. I would sum up the market action with those words today, given the fact that we were stuck in a range, but the Nifty has managed to shut shop above that 19,650 mark, and that's crucial. But if you look at the mid cap end of the markets, even the mid cap index was fairly muted, but small cap stood out, given the fact that the Nifty small cap index gained somewhere around 0.6%. If you look at the advanced decline ratio, they were largely in the ratio of 1:1. Almost equal number of gainers to losers on the NSE. Sectorally, autos, FMCG, realty was one pocket that did well yesterday also, and today as well it was extending gains, and metals, FMCG were the other pockets that were doing well. What didn't do well was the entire banking pack once again. So private banks were among the top losers on the Nifty today. You had IT also as a pocket that didn't do all that well. So on the Nifty, among the gainers, you had Eicher Motors, of course. Jeffries increasing the target price, that had a positive rub-off effect on Eicher. That gained somewhere around 3% or thereabouts in today's session. You had Nestle, Bajaj Auto, Tata Steel on the back of Moody's upgrade. You had ONGC also among the top gainers. On the losing end, as I mentioned, some of the private sector banks like IndusInd Bank, Kotak Bank were among the losers. Tech Mahindra, Asian Paints and Cipla were some of the other losers. But Yatin, what stood out in the mid-cap end of the markets today?
So if you look at the mid-cap end of the market, we had defense shipping stocks which are doing well. So we had the likes of Kochi Shipyard, that stock surged nearly 11%. We also had Mazgaon Dock, that stock was up 4% last time I checked. Apart from that, Idea Cellular, that is one of the top F&O gainers today, gaining by nearly 7.5%. Good traction. Obviously, there is hope that there could be a fundraising plan which could get concluded very, very shortly. And the stock, ever since the news has come out, has been doing well in trade. MTAR Technologies and Apar Industries are the other stocks wherein we saw some moves coming in with good volumes, 6 to 7% higher for all of these stocks. What was not doing well is the likes of HLE Glass. That stock fell nearly 13% in trade. Obviously, there was a block deal of nearly 25 lakh shares, which there was some selling which happened. Also, we had Voltam Transformers, wherein promoters have sold nearly 12 lakh shares or 10% of equity, and post that the stock was down 5%. Also, Indiabull Real Estate, Shriram Finance, Sobha Developers, all of these stocks witnessing 3 to 5% kind of a cuts. But yes, the mid-cap end of the market also was slightly under pressure in trade today.
Well, right, that was about the entire market action summed up for you today. But let's also take a look at some of the stocks that were on our radar this afternoon. Starting with, of course, Eicher Motors, top Nifty gainer today. At one point, it was up 4% or thereabouts, cooled off slightly, but ended with gains of somewhere around 2.5 to 3% or thereabouts. So Jeffries has maintained a buy rating on the stock. It has upped the target price to 4,150 rupees from 4,000 earlier. It says that the tailwinds of two-wheeler demand recovery will work well for the company. The stock has not done that well compared to the auto index. It has underperformed the auto index on a YTD basis. The stock is up somewhere around 8%, whereas auto index has jumped 28%. But that is something, despite that, Jeffries is bullish on the stock. It says that the competition concerns obviously weighed on the stock, but it says that channel checks are suggesting that it hasn't really impacted the company that much, because Bajaj, Triumph as well as Harley Davidson, Hero Harley have seen demand, but even in cities where they are available, the demand hasn't been as good as was being expected earlier. So on the basis of that, the brokerage believes that there is significant room for upside going forward for Eicher Motors, and the industry tail premiumization, demand recovery in the two-wheeler space, as well as the limited impact of competition is something that will work well. In fact, export growth is also expected to go up going forward. So on the back of that, the brokerage says that it expects EBITDA and EPS to rise 62% and 81% over FY23 to FY26. And when it comes to Royal Enfield, it values Royal Enfield at I think 25 times PE ratio going forward, and the CV business is valued at 5.5 times price to book, FY25 price to book. So that way it has upped Eicher Motors in its pecking order, and it's one of the preferred bets after TVS Motor for Jeffries. So looks like there is a lot more room for upside when it comes to Eicher Motors.
Yeah, and the stock also was the top gainer in the Nifty 50. That's about autos and a lot of stocks moving there, but gas stocks also off late have been doing well. Obviously, gas stocks as a pack is considered to be defensive. Obviously, there have been changes to the gas prices recently, but Citi believes that India's gas consumption is yet to see a lot of growth. So moving ahead, the demand as well as the supply side would remain hot. As far as GAIL and GSPL is concerned, Citi believes that there is further volume uptick that we could see in gas offtake, given the fact that demand remains strong, especially from industrial users and power plants. Also, if you look at GAIL's Dahej unit, there also some pickup in the utilization rate is what Citi believes could drive earnings. Now, obviously, the upcoming cut in ceiling price of HP gas should be positive for city gas distributors like MGL and IGL. And also we have the auto companies which are pushing CNG vehicles. So India does not have an electric infrastructure. So to really look at cleaner cars, CNG is one of the options. And if you look at Maruti, the sales mix is clearly changing towards gas cars. So obviously as a proportion of overall sales it's small, but it is growing at a faster pace versus traditional oil powered engines. Now, in the order of returns, Citi prefers IGL, MGL and GAIL. So, the city gas distribution, obviously IGL, MGL would have an advantage over the long run according to Citi, and hence they have a buy rating on all of these three stocks.
All right, lots of upside expected in some of these city gas distribution firms as well. But let's take a look at some of the other stocks that are on our radar. The second stock on my radar, rather, Varun Beverages. Well, BofA Securities believes that there is a lot of fizz left in this stock, despite the fact that it has run up over 45% on a YTD basis. It is fairly expensive at 60x 12-month trailing PE ratio, but still BofA sees the stock crossing that 1,000 mark, 11% upside from current levels. In fact, this is the only brokerage that has pegged a target above 1,000 rupees on Varun Beverages. Now, the brokerage remains constructive on the stock. It has said that the company is expected to sustain the profitability and growth going forward, even though India has seen erratic monsoons and it has had some bit of impact on the company. But it is looking beyond the adverse monsoon season and believes that the key drivers going forward would be the potential distribution upside from here, new territories and product lines for the company looks to enter those. And when it comes to the revenue CAGR estimate, it has a 19% estimate over the next 3 years, and for EPS estimate CAGR it has somewhere around 23% over the next 3 years. So looks like there is a lot more fizz left in the stock, even despite the fact that it has run up quite a bit on a YTD basis.
Absolutely, and the markets have been sideways, and there is some stock specific action, but yes, we would like always the bulls to be in control of the markets. As Nandita was mentioning, that 19,650 was an important level, and we tried to maintain our index levels above that level. Probably the markets are taking support at current levels, consolidating before the earnings season. Obviously TCS, Infosys and a lot of these IT companies will be reporting their earnings first, and probably from 2 weeks from here on we could see a whole host of companies coming off their earnings, and probably the market mood or the up or down move will be probably determined by the earnings season. Obviously monsoon has been kind so far. The kind of concerns we had probably mid of September
has made up for the August
so last 10-15 days the rainfall has caught up. Obviously today IMD said that we could see a monsoon withdrawal from north and northeast in the next 3 days. But yes, probably India has got sufficient rain versus the El Nino concerns that we had at the start of the monsoon quarter. So yes, bulls are seemingly having a control over the markets, but it's right now at a make or break level. Let's hope we have some positive green for trade tomorrow.
Yeah, let's hope the bulls win in this tug of war between bulls and bears. But with that, it's a wrap on this edition of Closing Bell. Thanks a lot for tuning in. If you have any comments, leave them in the comment section below, and of course come back and join us tomorrow morning at 8:30 AM on Morning Trade. But from me and Yatin, thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.